What's up, guys? I hope you're all doing good. So it is me. 6 months later, I thought, why shouldn't I film a new video and probably even resurrect my channel overall? Because I thought that it's going to be great to continue doing one of these and to help you all watching out there, um, get better in trading. And yeah, I thought, why wouldn't I start with undoubtedly, of course, the best trade that has happened in August because it was very clean. It was based on higher time frame intention and lower time frame execution. And not only that, we had a lot of entries moving forward after one of those great that I will showcase. And I will showcase only three entries in this video. But yeah, without further ado, let's start. And as always, Euro US dollar is queen, in my opinion, because it moves very clean and it respects all the ranges, tight spread. I mean, tight stop losses, low spread, and all that stuff. So of course, I always start my analysis based on the daily time frame, and based on the daily time frame, what we had kind of unconfirmed low, right? But as soon as we have had our 4 hour change of character in here, right, we have kind of started the phase of retracement, right? This is the phase when, even though daily is bearish, as you can see, we have violated and we have broken this point of structure. That means that our swing point high is here, swing point low is here, right? And although we were bearish, we started to be bullish, right? And we needed one kind of sign for us to, you know, realign with the higher time frame trend, namely bearish, and it would have been getting at least to equilibrium, right? At least or somewhere in the premium, and mitigating something of significance value. In this case, as you can see, I had this 2 days order block marked out, which considered to be exactly at the equilibrium of this daily range. If I was to go on 4 hours, we would have noticed that this is pretty much the last range to the upside before the expansion to the downside that has broken the point of structure to the left, right? So as soon as we hit that 4 hour zone, the anticipation was that we will be selling in order to get the lower prices plus to fill this kind of liquidity void that has appeared there to be. Because we have a lot of liquidity to sweep, right? And we have swept multiple times the buy side liquidity, but we have actually never in the last was that 2 weeks spot the sell side liquidity. So yeah, the anticipation were that we were be selling, but uh, we needed a 15-minute change of character in order for us to back the idea of selling, and that is why if we go to 15 minutes time frame, we will see that I have kind of marked out something already, and we will see that we have changed our character after the news. I suppose it was CPI news that have brought the price back to the upside, right? And after we have realigned with daily and for our anticipation, right? 4 hours was bullish, but we still needed to retrace back into the discount zone in order to get the benefit of better prices. And in this case, we needed some selling pressure. And selling pressure could have been after we had received our change of character. And after we receive our change of character, of course, what we want to do as the next stage is that we want to mark out the origin that has been the reason why the price has uh, pulled back to the downside and shifted the order flow to bearish, right? In this case, we don't really have anything clear around here. It's more of a inducement to me because we didn't really have a certain great high that has swept liquidity or something of a big value, right? We had some I would say it was even was just like it was the move overall was corrective, and that's what I didn't like. Right. In this case, we have firstly tapped into the 4 hour zone. We have aggressively rejected, as you can see, and then the volume and the impulsive price action has kicked in. As you can see, we had after all these three candles, and then the impulse has kind of slowed down because we've been reacting to the demand zone. And the thing with decisionals, as I've said, is that if the decision doesn't really sweep the price, it may be used as inducement, right? So this was the reason why I thought, and I didn't mark out anything up here because I thought it will used as inducement. Of course, we don't know that for a sure reason, but this was my anticipation going into the day trading this price action. Okay, so the next point in my plan is, of course, to wait for price to hit this 15-minute level and then to see some shorts, right? But as I've said multiple times, market is fractal, and pretty much what we want to see is the same thing on all of the time frames. And as soon as price hits these 15-minute supply, what we want to see is a realignment of time frame of 1 minute time frame to 15-minute time frame, which means that we want to see chalk and flip, right? They most of the times happen simultaneously. And in this case, if we replay the price closer to our zone, so we had some buying pressure there, and then as soon as we hit our as soon as we hit our 15-minute POI, right? What we want to see is 1 minute change of character. So I haven't deleted all of these sell positions and pretty much confluences because I thought if I was to delete them all, it will take me ages to write them all over again. And yeah, I don't want to spend much time on that, and I don't really think that you will be interested in me doing that live, right? So let's get back to action. And as I've said, what we want to see is 1 minute change of character, right? So uh, let's wait for it. And as you can see here, we didn't really get the change of character because the price has put equal lows, right? So that's the reason why. Okay, now it has done nothing. It has put the equal lows, and now we have our change of character, right? So potentially we would have been looking for sells from this supply zone. And the reason why I don't have that marked out is because, as you will see, this is why I trade seconds, okay? 5 seconds is a great way to check the zones like 1 minute or 2 minutes for their security and for their validation. So in this case, for this supply to be valid, what we need is 5 second confluence. And as you know, my 5 second confluence is liquidation, mitigation, V-shape recovery, chalk and flip, right? In this case, what we can see is that this zone, as you can see, we have this wick. This zone fails without giving me the confluence, right? So we can say that we got mitigation, right? We did even in some point get our V-shaped recovery, but was there chalk and flip? Well, no. Here is the first part of chalk. Here is the second part of chalk, and you can see that we have never gone to that place. Plus, did we get a flip? Well, here is our demand, right? Did this demand fail? Well, no, because it has actually swept the supply, right? So that means that back in that time, we had supply still weak and demand fully in control. So that's why we get back to 1 minute and we still are looking for um, 1 minute change of character and flip. So let me replay the price even further than that. Okay, now we want to see is okay. So price has now closed below this demand and has demonstrated as a change of character, sweep of high, sweep of low, right? So as you can see now, we have 1 minute refined POI. That is going to be the zone in which we are going to be looking for 5 second confluence. As soon as price hits that level, right? And in this case, I will have even more annotations for you to read after you pause the video. And as you can see, I've written here, there is no chalk here. Why? Because every single candle in here trades higher than the one before. That means that we need a clear high and a clear low for us to get a chalk, right? And that's why the chalk that would have happened, and I'm pretty sure it has happened, would have been up here, right? And that's why I have written here is the first chalk. It is very deep, and the reason why we want to wait for the next one, or we want to see an establishment of a supply chain, is because if you then going to be looking for the supply chain to sell from, or the supply overall to sell from, well, you may not find one, right? In this case, this range didn't do anything. This range didn't do anything because down here we have reacted once again, right? Which means that we will not be selling from here because we have still two highs to cover, and that's going to be a big stop loss, right? So that's why we want to wait for another one. We want to wait for something clear. Maybe price returns back and sweeps this change of character and these highs, or gives us, first of all, the violation of this 5 second structure and 1 minute structural point, right? And then it will give us more clarity, right? And more understanding to what is price doing or attempting to do, right? So then we started to retrace, right? With this rectangle, I always mean the retracement phase. And as you can see, we have now built three equal lows, which is the reason for us to mitigate this supply deeper, right? And that's going to be liquidity to target, right? So now, without further ado, let's go and see what the price does then. Well, I wish I could have done it faster. Okay, so the plan is that after we sweep this high, we need our 5 seconds confluence, right? Which this sweep is a part of. So as you can see, what we're gonna do in this case is that we will sweep these highs, right? All these highs. We will then here. We will sweep this low, and as you can see, we will even react to the demand that has been created. So with this little candle and this little pink candle, we have reacted to the demand, right? So here's our demand, right? And these two candles are a reaction to our demand, meaning that there is, or at least there was, an interaction between buyers and sellers. Therefore, this is a valid flip. And now demand has failed to remain to be in control, and supply has overpowered it. Therefore, we're going to be looking for sells. And the first position is, of course, here. Therefore, we put the position, and we will create even some inducement along the way, as you can see. And then we got triggered. As you can see, the zone perfectly uh, remains intact, so we don't sweep it. And in this case, with 5 seconds, we don't necessarily need to hold the levels like supply and demand. Like sometimes they will get little wicked, right? That's not a problem on 5 seconds, but it's still great to see how these small zones on such a little time frame hold. And if I replay the price, if you're not sure if this is the right entry, or you may have missed this one, sometimes you may have a 1 minute opportunity. And in this case, we had one. So in this case, you could have, once again, you could have seen a double confirmation on 5 seconds, meaning that you would have been either twice in a trade in a same position, or you would have missed the first one, you would have entered the second one, or you would have uh, ignored the second one and you would have entered the first position. And of course, based on just 1 minute time frame, the first target that you're going to be looking to take partials off is, of course, this low, because this is the low that has failed to break this high or any of these highs, right? And that's going to be the first liquidity pool. And the second target that you want to be eyeing is this 15-minute week low, because we have failed to break this high, meaning that this high is protected now, this low is now weak. And of course, based on the higher time frame, right, what we want to see is we want to mitigate the unmitigated demand, which is going to put us at this demand right here or even lower. It depends on which kind of demand you have marked out. You may have marked out this one. I'm pretty sure there was demand on 4 hours, but this one was, as I've said, inflicted by news. Therefore, it's going to be a reaction point, but it's not going to follow through because news POIs very, very rarely hold. Okay, so let's get back to 1 minute and let's see some other, as I've said, two positions that you could have benefited from. And in this case, it would have been that you have impulsively, right? Impulsively broken the 1 minute swing point, right? And the next step is to pick the range, right? Not one little candle, is the range that has been the origin of the movement to the upside before the expansion to the downside, right? Because we are still trying to sell, meaning that we want to find the supply range, and that supply range is the movement to the upside before expansion to the downside. So this is why I have picked this movement to the upside, right? This may be a 3 minute candle or 4 minute POI, whatever, but this is the last range, okay? It begins with this wick and then it goes to the upside, right? So that's why whenever we hit this zone, we want to see the same confluence as I've pretty like I've shown you here, right? So let me replay the price, and now I think we will hit it. Okay, so the same thing. We will have some annotations here. If you want to see more annotations, or if you want to be uh, more in touch with me and to know more about trading and how I trade and all this stuff, you may join my private Telegram channel. If you are going to be interested in that, just DM me on my Instagram, and I will sort you out. Of course, there was a little price to that, but it's still a bargain for what you get. But as we get out of marketing thing, right, we come back to trading, and what we see is that we have first part of change of character done. We have swept the high, we have liquidated the highs, we have mitigated the supply. Now we want to see a V-shaped recovery, and as you can see, we have a V-shaped recovery because these two candles are shorter than the next two ones after them. Okay, so this is the rule for V-shaped recovery if you didn't know that. And then what we want to see is the demand um, show a reaction and then, of course, ultimately fail. And as you can see, we have showed a reaction twice, but then ultimately, even more than twice, but ultimately then have failed. And this was the last range, as I've said, to the upside before going to the downside. And this is where, like at 50% of this range, we enter. If you don't want to pick the whole range, you could have refined it to this little candle, right? But I would say that on 5 seconds, over refining stuff is very, very risky, because at the end of the day, you will never know if the price mitigates only 20% of this range or 70 or 50 or whatever. And from here, the price just went, right? We'll do that on 1 minute. And of course, the same targets, the same target. First target is the first week low on 1 minute, the same target, and based on 15 minutes and 4 hours unmitigated demand. So in this case, the only difference in target is based on 1 minute time frame. So you take the partials at a first low. Okay, so next thing, as you can see, I have marked down the POI that has been the origin to the break of structure, right? So this POI was not only the origin, it was actually the flip zone. So we had some flip zone here, we had some demand, we have reacted to the demand, price has jumped back up and then once again jumped back up, but then ultimately failed with impulse. And this was the flip zone plus the zone that has been the origin to the break of structure. So whenever price comes back to that level, we want to see 5 second confluence. The same as always, right? And now as price gets to our point, I'm not sure it has tapped in, but let's see if it did. Okay, it didn't really tap in right now. I don't have any annotations here, so I will basically. Okay, so what you see now is okay, so what we can say that the change of character is pretty much marked out, right? The first part has happened here, the same thing as the last time, right? These highs are not clear. They are trading above one another. Therefore, there is no clear high. Therefore, there is no chalk to be looking for there. So the chalk means that it's going to be this high getting swept and this low getting violated as well. And that's going to be, um, as you can see, now done, right? So this case, right, V-shaped recovery. Do we have it? Well, in this case, we don't really have it because as you can see, I marked it on purpose. The two last candles have been very impulsive into the zone, but the reaction from the supply zone hasn't been very appealing because it has been corrective, it has been going to the downside, but then as I've seen that we have reacted to the demand that doesn't really look as a demand, but still that zone has produced some reaction to the upside. Therefore, there is a zone in which we had some buyers or buy orders resting. And after that zone has produced a reaction, right, we have flipped it and we have flipped it very impulsively. And that's what I liked it. So that's why I have kind of ignored that we didn't really have V-shaped recovery there. So that's why I was looking to sell as soon as the price gets to this level. And as you might have already understood, it will tap in. So I will actually put my order just here and the same target, the first target is based on 1 minute entry, so it's going to be the violation of this low, and then 15 minute and 4 hour targets are the same as of these two first trades. Now I'm not sure how uh, big of RR this cumulative stuff would have been. That's all theoretical. It could have been 20 RR, it could have been 60, it could have been 80, could have been 200, whatever. The most important part is how you tell the story to yourself, how one by one, like one step by step, right? You make this trade come true or play out, right? Which zones do you mark out? Does it make sense from the liquidity standpoint? Does it make sense from structural standpoint? Are you patient enough to wait for the confluence that you need to see within your zone, and all of these stuffs? And how do you set targets? Does it make sense from once again, as I've said, from the structural standpoint, from the liquidity standpoint? And as soon as you build a plan, right, and it will make sense to you. And then if you practice enough, if you see this play out very much on the long term, I would say at least 3 months, right? You will then gain confidence that your edge. that you have developed, either that be because your mentor said that, or I, or whatever, right? You will be confident in yourself more, and you will be independent then. Okay, so I hope this video has helped you to see the markets to some extent the way I see them, right? Let's get to 15 minutes to see, to actually show how this trades will run. So 15-minute POI, I mean 15-minute target or take profit based on 15 minute is hit, and 4 hour TP is hit as well. So I hope you have liked this video, and I hope you will get something off this video, that you will benefit from it, and I hope to talk to you in my next video. Hopefully, that is going to come out soon enough. Anyways, thanks for watching this video. I hope once again you have liked it. If you have some kind of feedback, I'll be very appreciative if you write it down in the comments below. And once again, if you want to learn to trade the way I trade, and you want to um, look at the markups that I have every day, you can join my private Telegram channel. The only thing that you need to do is pretty much DM me on Instagram, and then we'll have a little conversation with you, and then uh, the rest is going to be minor. So, yeah, I hope you're having a good time, and peace.